What's up, guys? It's Sierra, your favorite Indiana realtor, and today I want to talk to anybody who's looking into getting into real estate investing, especially beginners, because social media will make you think that investing is super easy. People online will have you thinking you could buy one house and instantly become financially free overnight. But listen, real estate absolutely can build wealth. But there are a few things investors need to understand before jumping in. So today, I am giving 5 investor tips that nobody talks about enough. Let's get into it. Number 1, cash flow matters more than looking rich. One of the biggest mistakes new investors make is chasing properties that look impressive instead of properties that actually make money. A pretty property doesn't automatically equal a profitable property. I would rather own a simple property producing consistent monthly cash flow than a luxury property that's draining my pockets every single month. So you have to learn to look at things like the mortgage payment, the taxes, the insurance, the maintenance, the vacancy, the repairs, the property management. Because if the numbers don't make sense, then the deal absolutely does not make sense. And this is especially important in markets in Indiana where investors can still find affordable properties with strong rental potential. Number 2, your first deal probably won't be perfect. A lot of people stay stuck because they're searching for the perfect investment property. They're searching for the perfect price, the perfect rehab, the perfect tenant, the perfect neighborhood. And honestly, that usually never exists. Now, don't get me wrong. You absolutely should do your due diligence. But sometimes people get trapped into analysis paralysis and they never buy anything at all. Most investors, they learn the most from actually doing their first deal. Number 3, renovations almost always cost more than expected. So please budget for surprises, especially with older homes. You'll open one wall and now you have plumbing issues, electrical issues, foundation concerns, mold, and suddenly your cheap fixer-upper, it isn't so cheap anymore. That's why smart investors always leave room in their budget for unexpected expenses. So never spend every dollar you have just to get into the deal. Number 4, tenants are not always passive income. I know social media loves calling rental properties passive income, but tenants can absolutely come with maintenance calls, late payments, turnovers, damages, evictions, vacancy periods. Now, good tenants can make investing amazing, but bad tenant situations can become stressful very quickly if you're not prepared. So that's why screening tenants properly matters so much. Number 5, real estate investing is a long-term game. Most wealthy investors did not become wealthy overnight. They built over time. They bought one property, and then they bought another, and then they bought another, and then they bought another. Real estate investing rewards consistency, patience, smart decision making. A lot of people quit too early because they expect instant gratification. But wealth in real estate is usually built slowly and strategically. And honestly, that's what makes it powerful. So if you have been thinking about getting into real estate investing, let this be your sign now to start learning. You do not have to know everything before getting started. And if you're looking to invest here in Indiana, feel free to reach out. My information will be in the description. And make sure that you follow for more real estate tips, investing content, and Indiana market insights. Until the next video, I'm Sierra, your favorite Indiana realtor. Let's go, investors.